Welcome to Atlas Live, Atlas Public Policy's live video podcast that brings together industry and policy leaders for lively discussions on the future of clean technology, transportation, the built environment, manufacturing, climate change, and more.
Welcome to Atlas Live. I'm your host, Nick Nigro, and we are here to talk about gas prices and the oil crisis that has been happening in the Middle East for some months now. We are joined by Monica Lee and Britta Gross. We're going to turn to them in just a second, but first, we got a video from our own Abby Olson to give us some context on this issue. Over to you, Abby.
In late February 2026, the U.S. and Israel went to war with Iran, and oil markets felt it immensely. Prices jumped from $72 a barrel to a high of $120 by March. U.S. gasoline went from under $3 a gallon to above $4 in a matter of weeks, where it still sits, pushing inflation to its highest rate since 2023, 3.8% in April. But this isn't just a price story, it's a volatility story. Consumers aren't only reacting to what gas costs today, they're reacting to not knowing what it'll cost next month. That uncertainty is driving people toward EVs. The signal is clearest in emerging markets. EV sales across Latin America, Africa, and much of Asia jumped 79% year over year in March alone. About 70% of those buyers said they switched primarily to save money. The International Council on Clean Transportation looked at 18 countries and found that drivers of gas cars are now spending up to $1,800 more per year on fuel than EV drivers. In some countries, that gap has more than doubled in the past year alone. In the US, the share of car shoppers actively researching EVs has ticked up from about 9% to 12% since the war began. It's a modest shift in consideration, but the real action is in used EVs, where sale volumes jumped more than 50% in a single month. The price gap between used EVs and used gas cars has narrowed to as little as $1,000 in some markets. The used market looks promising in the short term. Over 600,000 EVs are expected to come off lease in the next 2 years, but according to the Atlas EV Hub, new battery electric vehicle registrations fell roughly 40% year over year in early 2026, tied closely to the expiration of Biden-era tax credits. Just as consumer interest in EVs is rekindling, the very incentives that could have converted that curiosity into purchases have disappeared. The oil shock has made the financial case for EVs impossible to ignore. The opportunity is real and playing out around the world, but action is needed in the US to turn interest into lasting adoption, and that work is still ahead.
All right. Thanks a lot for that context, Abby, and welcome to the show, Monica. Welcome to our office.
Thank you. Thank you for having me.
And we got Britta too. Britta, you're joining us from far away. I know that we just lost you a second ago, so we're going to be trying to bring you back in just a second. Britta's joining us from Germany. So we'll start with you, Monica. Oh, there we go. Hey, Britta. Can you hear us? Okay, while we work on that, we'll go to you, Monica. Okay, so let's get started. So how long does this gas price spike, need to last for it to change the total cost of ownership equation for EVs versus gas cars, or at least change the consumer's perception of it? I know you're not going to be talking about running the numbers and such, but tell us about perception of consumers and what's happening right now, what it means for them.
Yeah, I mean, I think that when you look at total cost of ownership, I think that we're already there. I mean, groups like Zeta have put out comparisons of electricity versus gasoline vehicles, and the price comparison is real. And people, as you said in your opening video, their consumers are recognizing it, and that's why they're looking at EVs more, and we're seeing those searches go up. But the perception piece is really critical. JD Power released a report saying that 26% of new vehicle shoppers were saying that they're now very likely to consider purchasing EVs in April, and that's up 3% from the previous month. On the other end of the spectrum, the share of people who are out looking for cars saying that they're very unlikely to consider buying EVs is down 4%. So the consumer confidence piece is significant, but I think what it really speaks to is the opportunity to drive a narrative around EVs. I think that the consumer piece is just one part of it. I think that when it comes to affordability, which is what we know is sort of the topic of the day for all people all across the country, especially between now and the midterms, I think that industry and industry players can really talk about the transition to electrification in a way that is depoliticized and that can really talk about how switching to an EV or just the electrification transition in general can really address affordability issues.
Yeah, I wonder, like, when it comes to, and I think about the consumer themselves, and they've experienced the ups and downs, especially if they're in their 40s maybe or 30s. They've seen the price of gasoline and oil spike and come down as conflicts have popped up, and particularly in the Middle East. What we also have seen, though, is historically, once those prices have subsided, the consumer kind of defaults back to a arguably a less rational behavior. Like, is this moment different, or is this going to be another case where, just like 2008, when the oil prices jumped, people flocked to back then it was the Prius. That was the car I had actually in that moment. What is it? Are we going to flock to EVs, or are we going to revert back to, large SUVs and that sort of thing? Like, how do you feel like that plays out?
I think it remains to be seen. I think that your video that you showed at the top of this talked about used EVs and all the used EVs that are going to be coming into the market this year, and that's significant. But it's not a silver bullet. We still need to see new EVs as well. But I think in terms of driving the consumer confidence, and again, I think there's also a lot of narrative work to be done around how people feel about EVs, not just in terms of what the total cost of ownership is, but things like range anxiety and infrastructure. And I think that, there's been a lot of work done by the broader community to make sure that all the wins that are happening and all of the charging deployment that is happening is actually communicated at the state and local level. I think that really drives consumer confidence as well, because they feel like they can take those longer trips. I think a lot of people used to think of EVs as, they're not aware that the range of the batteries is so much higher than it used to be. The charging infrastructure is being built out, that they can do things that they maybe didn't feel like they could do with an EV before. So I think driving narratives around that piece is also really important.
Yeah, that is. Yeah, we are sort of at a turning point in some parts of the world. In particular, we're not quite there yet, I don't think, in the US, but it's true that you can see the data coming in from other markets where there's been an acceleration in EV adoption. Britta, can you hear us okay?
Yes, I can.
Awesome. Okay, cool. So sorry about the technical snafu there. So let's bring you into the conversation and tell us how things look from where you sit at EPRI when it comes to the gas price spike, and what it's going to take for people to have that interest in EVs sticky. We've been in this business for a really long time, and so we've seen that price go up and down.
Yeah, I'll build on the last conversation, but let me just start with your recent point there, which is EVs have consistently, for the last 15 years, proven to be cheaper to operate on fuel than gasoline counterparts. We used in the auto industry talk about it, sort of, it's a third cheaper, one third to 2/3 cheaper per mile to drive electric than on gas. That's in normal circumstances. Today, we ran through another analysis looking at the cost to drive per mile on gasoline versus the comparable electric vehicle. And it ranges from 16% in the state that has the least advantage because they've got different kinds of fuel sources and electricity, et cetera, to 73% advantageous, 73% savings per mile to drive those vehicles. So it's always been true that you can make up the difference in the upfront cost of an electric vehicle by taking into account the cost to drive an electric vehicle per mile. The question is, whether do you break even in 1 year or 3 years or 5 years? The break even point is something. The challenge is, of course, that most consumers don't calculate cost of operating the vehicle. I think what's really the opportunity right here, I think there are a couple opportunities in this particular gasoline spike moment. One is many consumers are scanning or putting their gasoline card or their credit card into a gas station, and they're walking away $100 poorer. When you start paying $100 to fill up a gas tank, I think you really do start to feel the pinch and turn your head over to electricity. It's different if it just goes up a little bit and it's $40, $50 to fill your. I think this moment is richer because that doesn't happen often. And that's what the fleet operators are noticing. Fleet operators are feeling that pinch. The truck drivers have already said, some of them, it's costing them $1,000 to fill up a tank with diesel in these large trucks. So, there is something very special about the significance of the moment and the pain at the pump, for both diesel and for gasoline. The last thing I'll say that's really interesting about this moment, not 8 years ago, not 4 years ago, it is simply that, did anyone notice we didn't drill our way out of gasoline dependence and oil dependence pricing? We are completely dependent on what happens in the rest of the world relative to gasoline prices. And that was sort of a promise we were made. If we kept opening up drilling areas, we would drill ourselves out of the dependency. Nope, not going to happen. Probably never going to happen. So that's one of the things that makes this one different. Now, can we communicate what Monica was saying? Can we communicate these points to make sure that consumers really understand this moment, why it's different than before?
Yeah, and I guess that's really the crux of the issue is the consumer's ability to internalize the things that you just said, and how are they going to, how's those internalization going to impact their decisions, and it's like,
Yeah.
what exactly, Monica, back to you on, when these oil price spikes occur, and as Britta mentioned, this one is significant, particularly for those who are price sensitive. What do mainstream people need to hear to better understand what this means for their monthly bills? And is it the case that for them it's like, yeah, you're going to have to make a lot of hard trade-offs in the near term, and based on the data that we've seen, this isn't going to go away overnight. It's going to last for some time.
Yeah, I mean, I think people want to hear that they're going to go down, and I think that's why Trump keeps saying, that they're going to go down as soon as the strait opens back up. And I think that Trump has had a lot of success in telling people things are going to be a certain way, and he uses the bully pulpit in a way that, in a more successful way than anybody in recent history. But I think that gas prices are different. People are driving around and they're seeing these on a daily basis, but I think that he's putting obviously a lot of his chips in the idea that he can open this straight back up again. You see his cabinet officials out there; they're being a little more circumspect. Secretary Wright said he didn't want to make any predictions. Secretary Rubio over the weekend said that he very much tied it back to the strait opening back up again, but he tried to put this in context of the global efforts, and he said in the United States we've done a lot of things to keep this lower than they've been in other countries and made it less of an issue than it's been in other countries. But I think remember from recent history that saying that people are better off than they could be is not really a winning political message.
Yeah, there was some quote from him, I think, outside the White House before his trip, to that effect, something about caring so much about the nuclear issue in Iran, and that superseding any issues around affordability. And, that I think that's a tough political pill to swallow for a lot of everyday people. And so, I want to turn to this story of EV affordability because, if you Google it right now, you can see lots of news coverage on affordability and the fact that there's a greater interest in electric vehicles. We have a burgeoning, used vehicle market because so many new EVs that were sold in the last few years have come off lease and now they're in the market. We've seen big spikes as a result, as Abby talked about. But tell us about that story of communicating, because a lot of the people who are in the used vehicle market are not EV adopters right now. They're new to the technology, and so you're kind of starting over with them. And in addition, you're potentially making it more complicated because they might be buying that vehicle from an individual, not a dealer. So they're not necessarily tied in with all of the things that could come from a dealer around education and awareness and other materials from the OEM. So it could be a harder story to tell and a harder transaction to make. So tell us a little bit about what you've been learning with respect to that EV affordability story.
Yeah, I mean, I think that to your point, when you bought a Prius in 2008, I think it might have had to do with gas prices a little bit, but you're an EV evangelist, right? And I think a lot of people who are buying EVs right now are doing it because they think it's going to be more affordable, and because maybe, to Britta's point, it's been challenging to get consumers to think about this, but I think there has been more education about total cost of ownership and about the fact that you don't have to go in for an oil change. I mean, there's not paying for $100 or $80 or $60 to fill up your tank. There's also which saves you money, but there's also the promise of convenience. And if we can balance that and say that, the charging infrastructure is there, then, you're reaching a whole new audience. So I think that there's just a new generation of people who are buying EVs who are doing it because of the economics, not because of the climate change imperative, which is the way that we broaden the transition for EVs. Maybe we've tapped out the amount of people who are going to buy it because they're worried about the climate, but people who are worried about economics, that's a wide swath of people.
Yeah. And I totally take your point. And for the record, I actually bought the Prius because of an environmental awareness and issues. I bought it just before that spike. And so when that spike happened in 2008, I was sitting pretty. It was $4 a gallon gas in 2008 dollars, which is considerably more today. And I was getting 50 miles a gallon, and I could feel that I had made a really smart economic decision, but admittedly, it wasn't an economic decision at the time. But I think you're right about how people look at EVs now, particularly in the used market. Britta, bring you in on that.
Yeah, let me add to that, because you just used the word sitting pretty. And that is how every EV driver feels right now. We are sitting very pretty.
Mm-hmm.
We look at the gas station prices and we drive right by and go, wow, wouldn't want to be in that boat anymore.
Mm-hmm.
I think what I'd also like to share with your listeners is that in the auto industry, much of the awareness about a new technology, if you can even call EVs new anymore, is neighbor to neighbor, colleague to colleague at work, and friend to friend. Sometimes not really inside your family. People really listen and see the plugs in your neighborhood street and the different kinds of vehicles that are plugged in. The value that the advantage each EV driver has, and the opportunity to just broadcast the cord, the savings by plugging in the driveway at night.
Mm-hmm.
This is a big marketing deal. What a neighbor can say to another neighbor is so much stronger than even a Super Bowl advertisement. That is not how this happens. And so it happens neighborhood after neighborhood. And I think that opportunity is great. And then I'll go back to the fleets. They are so sensitive. Fleet operators, think about the Amazons of the world, the PepsiCos, the FedExes, the post office. They are so price sensitive. This is really painful for them to think, sort of look through the calculations and start looking at the math of what they're spending on gasoline. And so as consumers also see the mail truck come through the neighborhood, the Amazon truck in my neighborhood, the Walmart trucks and the Amazon trucks are all electric every day, all the time. So, you start to appreciate, there's something different here. And maybe they're not doing things because this is, because it's good. They're doing it because the math tells them they actually should also be doing this. I think it's an important recognition.
And just to drill down on the first point that Britta made about EV owners being great messengers, I think there's the other side of that coin, which is the people who are feeling the pain of the high gas prices, getting together and saying, "Where'd you find cheap gas?" Like I was at a garden party this weekend. Somebody was like, "I know there's cheap gas over here, so I've been waiting to fill up until I came over to this side of town because I know I can get cheaper gas."
Wow!
And I think the power the political power that can build is significant. I mean, we see that in election after election, where issues like this, the cost of groceries or the cost of gas, can really be something that rallies people and can build political power. So it's always an interesting talking point amongst. It's like the weather and gas prices. People always seem to talk about that.
It's the one thing that everybody knows what the price is.
Yeah.
And I think that particularly right now. And Britta, I really take your point on the fleet folks, because diesel prices are considerably higher right now than gasoline prices on a per gallon basis, and those are the folks who are the most price sensitive. And when you were talking, it made me think of some recent news out of California, where Tesla is now selling their semi, the Class 8 tractor trailer vehicle, and they sold enough, or they have enough orders for the Tesla semi for the state of California to meet its 2030 target, I believe, for the Advanced Clean Trucks rule, which is now in peril itself as a rule. But basically, the economics and the utility of that vehicle has made it such that the regulation was going to be exceeded. And to your point about the EV market being much more about dollars and cents, I mean, the canary in the coal mine of the fleet operators, when they see that and they start buying those vehicles in larger volumes because they're actually saving operational costs, that should consumers should be much more aware of that as a result. As Britta, you mentioned, They see them in their neighborhoods now. They see the delivery trucks. These are the guys who really, value those kind of operational costs. And I think that kind of makes me think about the OEMs and where they are, the automakers themselves. Going into the last couple of years, they were ramping up capacity and making a lot more vehicles available for sale, different types of models, different types of different types of utility vehicles. And in the last year, they cut a lot. And so now we have American auto industry that's not ready for this particular moment. There's a few exceptions to that. Of course, Tesla and the other all EV brands, but also Toyota, right? They keep going with launching new electric vehicles. And I think that's probably a surprise to some of those who's been working on EVs for a long time, but they're ready to meet that moment, which, is kind of ironic for me personally, given that I bought the Toyota the last time we had such huge gas prices. So, going to this total cost of ownership thing and with buyers, what is it that's going to resonate with them? Is it going to just be that price at the pump, or is it going to be other factors that are going to help, turn them into going from EV interested to EV buyer?
I mean, I think it's fuel costs and the maintenance stuff, like we've already talked about. I think Britta can speak to this probably much more so than I can, but it's people are really driven by short-term costs. And if they can save money in the short term, if they're able to do that, now it's not possible for everybody to go out and buy a new car or buy an additional car. But if it's raising the awareness to the question that you asked earlier, how does this play out in the long term? You plant that seed enough times and we have a fertile enough ground for that narrative to spread, then I think that the ability for more people to make the jump, increases. But I think Britta probably has a lot more to add on that point.
I mean, this is really a tough question, to be honest. I mean, I guess the things that we should really focus on, and let me knit a couple things together. First, it's really important to keep our eye on the Tesla Semi. That is a remarkable vehicle by all accounts, every test, every pilot, 500 miles of range, carrying load. There's something very special that might be happening in the truck market that may actually just come in from the back end where we thought it was impossible and maybe move that adoption towards consumers. So I think that's one thing to look at. No one's buying those trucks because they look cool. They're buying it because they actually will deliver goods cheaper. And we already talked about the pain at the pump with the diesel truck drivers. They're in anguish. Again, imagine $1,000 every time you pump, diesel into your truck. I would also say that the other thing to keep your eye on is not maybe necessarily the broad portfolio. Maybe I'll just be honest about that. The automakers it is really unfortunate where we sit right now and how automakers have to deal with the situation. I think maybe two things to think about. One, they are working and bringing to the market $30,000 new electric vehicles. They have worked very hard on vehicles that come down and meet that price point. You can't forget that the average retail price for a car/truck, pickup, whatever, it was like $52,000 last year. Gas cars, SUVs, trucks, they're averaging now $52,000. So it's remarkable to think that we can get EVs on the road that are around the $30K price point. And I won't go throw names out there, but you guys can go look them up. So I think that should be the focus. Look at new vehicles that are meeting that price point that is so strategic for them. Then look at the used car market that's really compelling and important. And then the next point I'll just say, you didn't really talk about this, Nick, but I want to just sort of mention something that's worth keeping in mind in this very, very difficult time where there's just not much support. And there's not really a vision. Where's this country supposed to be going? To have a burgeoning, productive, successful car market and truck market, it's pretty clear it's going to have to be electric, and we've lost that thread. But while we're sort of challenged with some of the discussion right now, just know that automakers invested a lot, and I'll talk about automakers because I know more about them than the truck makers. The car makers have invested a lot in battery manufacturing. There are many, many new building in development battery manufacturing plants. Well, what are they doing? Are they cutting those? as far as I know, and I know one company very well, all 7 battery manufacturing plants are manufacturing batteries, selling batteries, etc. What they're doing is they're actually putting them in the stationary market for now. So the pivot, once we get our act together again, the pivot back to EVs in vehicles, $30,000 hot point selling point for electric vehicles can happen rather quickly. So we have done groundwork out there that allows us to build on that. And I think that's just, I'm not as depressed as maybe I was 6 months ago, thinking, oh my God, what's happening here? There is some hope that the pivot can happen again in the right direction.
Yeah, and I really just want to echo a couple of points that you mentioned about batteries. First being, plug our report that we put out last week on the global energy supply chain. What we showed is that, China's really eating our lunch when it comes to batteries in particular, which makes up about half of the total global investments in clean energy right now for manufacturing. But that's also the largest share of investments in manufacturing here in the US when it comes to clean technologies. And I totally agree that the auto industry is accommodating what the market needs in order to try to get those factories to capacity in the near term. And that's going to be, like you mentioned, stationary storage. Ford and GM are doing that. You've got other companies looking to get into, pivot from electric vehicles into stationary storage. And I think hybrids are also going to play a big role in that, because we do need to get much better at learning by doing. And I also make a plug for Secretary Rubio, who was on Meet the Press or NBC News over the weekend and did an interview where, he cited that as the first piece of technology that we have to really get better at when he was talking about his visit overseas to China was batteries. We invented lithium ion technology here in the US, and, we ceded that ground to other parts of the world. And, he cited that as an area of technology we have to get much better at. And it's the investments you're talking about, Britta, that are going to get us there, which is a great transition to our last question about the next couple of years. And, as I said, in my opinion, we weren't ready for this moment because we kind of turned the spigot off of EVs just too soon. Had we kept everything going for just another year, I think we would see a very different EV market right now, because I think a lot more consumers would have been driven towards them. But, as Britta, you mentioned and alluded to, we're going to be ready to be able to pivot back to EVs when we can. And so let's talk a little bit about what that looks like. I'm not asking either of you to predict how long is this Strait of Hormuz closure going to last, or will Iran use their newfound leverage to continually close the strait at a whim? We're not going to get into that because that's not our area. But tell me a little bit about what you foresee, both from the consumer and messaging standpoint for EVs, but also from the industry side. So why don't we start with you, Britta?
I mean, maybe the first place I'll start is just with the volatility of, I don't think we've really talked about that yet, electricity volatility. And maybe you folks could take a look at a couple quick takes, one-pagers we put out a couple weeks ago. One is on state by state, the comparison of driving a mile on gasoline or driving a mile on electricity. And the other one is on the volatility of gasoline versus electricity. And electricity, prices are rising gradually, very gradually. And it's just sort of this very level, very gradual line. You take a look at gasoline volatility, and it's just spiking. It's coming down, it's spiking again. And no fleet operator that wants to run a sane business knows how to deal with the volatility of gasoline. And that's much the attraction or additional attraction of electricity, is just you can count on it. You understand it's local, it's produced locally in general. That advantage is super. And then I'm just going to say it comes down also to the cars. If you're really going to talk about the consumers, again, I'd love those one-pagers to get out there, but it comes down to consumers feeling better about knowing you can just plug an EV in an outlet. I've been driving EVs since late 2010, all different kinds. I still don't have a level 2 charger in my garage. I charge with my cords into the garage, 2 different outlets. And that simplicity, it just seems never to get out there. I just plug it in the wall. Home charging can't be beat. So I think that in the next couple of years, to get ourselves ready, yes, apartments and condos, please start putting in outlets. They're very, very inexpensive to put in when you're building the building or doing some modification projects. Put those outlets in there because there's nothing in comparison to the value of just being able to top off your battery every night, whether it's a pure battery, a BEV vehicle, or a plug-in hybrid, than just being able to plug into the home outlet.
Monica?
I guess I'll bring it back to the volatility piece and the narrative opportunities, because I think that is one of the biggest opportunities and I think charges for the EV community is to use this as an opportunity to raise awareness about the need to produce more batteries, about the supply chain, about the critical minerals. And I tie it to some of the lessons learned and like the narratives and the awareness around chips during the pandemic.
Yeah, exactly.
It's like nobody really was paying attention to chips until we couldn't get them and we couldn't do all sorts of things. And people really raised awareness. Now that was channeled into legislation and, the ability to make, progress on the federal front, it's not great right now, but that's where we can build power in states right now to try to drive the awareness around the things that we know that are important for the transition, like batteries, like supply chain, like critical minerals and stuff like that.
Yeah, I hear that as an economic security argument as much as anything, and I think that's a great place to leave it. So thank you so much to Britta and Monica for joining us on this special episode of Atlas Live. We'll be back again soon.